Hello, I'm Kacee Johnson, Senior Director of Strategy and Innovation at CPA.com, the business and technology arm of the AICPA. And this week, we're going to be talking about Bitcoin is booming, and so are the taxes.
Hello, my name is Amy Miller from AICPA DC Tax Policy and Advocacy team, and I'm joining Kacee Johnson this week to talk more about why blockchain and Bitcoin taxation is something you should all be aware about.
Welcome to the Go Beyond Disruption podcast, brought to you by the Association of International Certified Professional Accountants, the unified voice of the AICPA and CIMA. Every week, we share insights from inside the accounting and finance profession that help you stay ahead of the curve, whatever business you're in. You can find links and more information in the show notes for this episode or by going to gobeyonddisruption.com. Blockchain is one of the many emerging technology trends that has the potential to disrupt the accounting and finance role. Each year, the AICPA and CPA.com, in collaboration with the Wall Street Blockchain Alliance, host an annual invite-only Blockchain and Accountancy Symposium that convenes the brightest minds across the globe on everything from crypto to supply chain management. So we are bringing to you a 3-part series from a few of those subject matter experts to discuss top trends and advancements. In this episode, Bitcoin is booming, so are the taxes, we will explore the complexities and best practices of crypto asset management. Our guest today is Amy Wang Miller, Senior Manager of Tax Policy and Advocacy at the AICPA. In this episode, we'll be talking with Amy about the most recent advancements in regulatory changes as it relates to cryptocurrency and how new tax provisions impact accounting firms. That's why we've called the episode Bitcoin is booming and so are the taxes. So let's get started. Hi, Amy. I'm here in Southern California. Where are you joining us from home today in DC, or have things started to warm up back east?
Hi, Kacee. It's so great to join you today. Yes, spring has arrived in DC, and we're expecting the cherry blossoms to bloom in about a week, so we're looking forward to that. But I think one of the frustrating things is also daylight savings is here, so we got an extra hour longer in the day, but it's very confusing in terms of scheduling and planning calls with our colleagues in the UK and in international offices, because now we're an hour off again.
Understand completely. I'm 3 hours behind you and still dealing with getting used to the early mornings. So, Amy, for our audience, I know that you're responsible for the development, review, and submission of comments to Congress, Treasury, IRS, and other regulatory bodies, also playing a key role in AICPA testimony for tax-related congressional hearings. Can you help everybody kind of understand what you're working on today and how does it connect with the blockchain boom?
What we're working on right now, as you said, we face IRS, Treasury, and Congress. And so in that aspect, we were working on comment letters, and our current project is the virtual currency transaction question on the US Form 1040. Our comment letter is referring to the question itself, who needs to answer the question yes or no, and also on the instructions to the Form 1040, because IRS has been changing the instructions. They had a draft version, now they have a final version, and they say different things. So that's what we're working on the comment letter side. And how does it connect with the boom in the blockchain? Well, we're also trying to keep track of guidance that's available to our members and how to comply with taxes. And back in starting in November of 2020, the IRS actually began sending over 10,000 warning letters to cryptocurrency users about filing their crypto-related taxes. And that letter said something like, we have information, you have had one or more accounts containing virtual currency, but you may not have properly reported. And so a lot of taxpayers received these warning letters from the IRS, and it's really created an issue because now we have to address it and we have to know, are we being compliant with the tax rule, and who needs to say yes or no to that question on the Form 1040?
Interesting. And the whole DC world and working with all the regulators, there's a lot of unknowns there. So plug us into your world for a minute. What does your 9 to 5 look like? What pivot points do you typically focus on?
Yeah, so that's a funny question because we don't have a typical day, and I never have a typical 9 to 5, as I'm sure, Kacee, you don't as well, because we're constantly trying to pivot as quickly as possible to meet our members' needs. So I actually in DC work with our international and individual and self-employed tax committees. So we try to anticipate issues and draft letters for those areas. When we draft it to Congress, it's based on legislative proposals that we believe our members need, new laws that we are brainstorming and thinking, hey, Congress, you should pass a bill that has this new law in it. Or we try to react immediately to current issues. So, for example, right now we're working to bring attention to and respond to government's quick passage of COVID-related bills. And there's been 4 COVID-related bills in the last few months, and they have all included new tax provisions.
Interesting. And how is this relating to other countries outside the U.S.? What are you seeing? I saw a recent article that India may be banning crypto. How are other countries dealing with the tax ramifications on cryptocurrencies?
Yeah, so what we're actually seeing now is that we saw a direction that many countries were going in various different directions before the pandemic. But now globally, what we're seeing is that a lot of governments are in need of money because they're facing significant deficits in their economies. And they're thinking, okay, where can we go for revenue, or specifically tax revenue? And cryptocurrency transactions is it's a new booming area, and a lot of countries are shifting their attention to figure out, okay, how do we issue guidance? How do we issue new laws, new rules, so that we can capture that revenue from those transactions?
Yep. And with this episode being called Bitcoin is booming and so are the taxes, as you know, last year around the same time, Bitcoin was valued at like $3,000 US. And now, we hit new records over 61,000 just a year later. So can you bring us up to speed as to what the most recent IRS requirements are as they relate to crypto assets? And are we seeing full transparency in reporting? What percentage are we at?
That's a great question. So in terms of the IRS, there's 2 very important factors to know when it comes to virtual currency tax. One is that in the US, the IRS treats virtual currency as property for tax purposes. And so that means that those transactions are subject to short-term and long-term capital gains and losses. The other important fact to know is that in the US, selling a virtual currency is not the only form of transaction that can bring about tax liability. So in some countries, you only are taxed when you sell a virtual currency. In the US, if you're trading one virtual currency for another virtual currency, so say you're trading Bitcoin to another virtual currency type, that trade and the gain or loss that comes of it can be taxed. Also, if you're buying something with a crypto, so now you can I think you can use crypto on a lot of different websites. You can use it on Apple, you can use it at Home Depot, and those transactions can be taxed as well. Now, internationally, the rules are very different depending on the country. And a lot of practitioners have to keep track of that because their clients are making these transactions internationally. For example, in the UK, cryptocurrency is taxed depending on how you deal with the cryptocurrency. So differently from the US, where we only treat it as property, in the UK, they say, if you treat it as money, we're going to tax it like money. Or if you treat it as an investment, we're also going to tax it like an investment. And similar to the US, in the UK, they also had a crackdown where the Revenue and Customs Department came to an agreement with Coinbase to disclose information. So Coinbase actually disclosed to the UK government transactions that they had on their files of 5,000 euros worth of crypto assets or more. And that was 2019, 2020. So that's a pretty recent crackdown of information. And then give another example of a completely different country with completely different treatment. In Portugal, Portugal is one of the most crypto-friendly tax regimes in the world, and proceeds from the sale of cryptocurrencies are tax-free, and crypto trading is not considered investment income. So it's not only important to know before you make a transaction which country you're dealing with, but also after to know the laws of that country. And then also in this world of, just the laws change so quickly, you have to keep checking back to see, okay, did this country change the way that they tax these transactions?
Interesting. You're right. There are so many new things that you can purchase with crypto. Like, Tesla was all over the news a few weeks ago with now they're accepting it. And I saw an article recently that the IRS had started a new initiative called Operation Hidden Treasure to root out all that unreported crypto income. So it must be pretty prevalent if they're starting things like that. So Amy, you're part of every year, the AICPA and CPA.com. We host a Blockchain and Accountancy Symposium to really kind of dive into the emerging trend, see how much it's progressed. And this last September, there was a lot of talk about more activity from different regulators. What are other advances in legislation from the regulators that we've seen since then in the last few months?
Yeah, there are a few areas. For example, with the SEC, they are constantly coming out with new rules, as well as in the US Treasury has a group called FinCEN, and they release information on how cryptocurrency will be treated and how those transactions will be, who is allowed to create a cryptocurrency, who's allowed to, make a new cryptocurrency coin. We also have to keep track of cases. So there's a lot of court cases that are ongoing of, for example, if a company created a cryptocurrency, a brand new cryptocurrency, is that allowed? Is that legal? And though the decisions from those court cases can determine a lot of things as well. Yeah, I think that one of the biggest things is to know is that globally, all the regulators on a week-to-week basis are coming up with new rules, new draft proposals. In the US, in Congress, we see proposed bills relating to the treatment of cryptocurrency every week. There's this one provision we've been monitoring, and it's about reporting cryptocurrency transactions, that are over, I think, $600. So say you went and bought something with your cryptocurrency for under or over $600, should that be reported in a 1099 immediately to the IRS? We see bills related to that all the time, and it's something to track because once there's movement, it could happen and pass very quickly.
So what is still unclear that we're waiting for guidance on for those who are investing in crypto as well as for the finance leaders who support them?
What's most unclear is what is the treatment and how are the transactions accounted for. I think that the technology of cryptocurrency is so advanced that tracking cryptocurrency transactions, the gain and loss, the basis, all of those things, that technology is not as advanced as the cryptocurrency itself. So I think that there's a lag in guidance of how to tax and how to track those transactions themselves because the technology is so sophisticated. And there are a lot of people working on that type of technology, but it is still lagging behind. And I think one thing we've noticed is that the experts, the technology experts who know how crypto works the best are the ones working on those, fun new projects of working with the crypto businesses and making those transactions more secure. Whereas I think that in government agencies all across the world, they are lacking a little bit of the skills and the technical advanced knowledge to be able to regulate. So the regulators are still trying to catch up with the business itself.
As happens with most technology, right? We will continue our conversation shortly as we discuss some practical steps to turn disruption into opportunity. This is the Go Beyond Disruption podcast brought to you by the Association of International Certified Professional Accountants. You can find out more about this podcast and about the rest of our wider project at gobeyonddisruption.com. So, Amy, looking at what's happening right now, would you outline some practical steps to help the affected sectors of our profession turn the current challenges into opportunities?
I would say if you are a tax practitioner, so you're helping a client comply with the laws of any country, a great opportunity is to be aware of all the rules and to be able to coach your clients in, whether how to invest in these things, or if you have invested, how to comply with the rules. So that's a great area for practitioners. But also another opportunity is for organizations like the AICPA in the areas where we believe the government has provided a lack of guidance in how to comply with the rules, we've created our own FAQs, our own frequently asked questions, our own glossary of definitions where, formal government definitions do not currently exist yet in this technological space. And we've put those out as white papers and comment letters. And in doing so, we are basically trying to get ahead of the curve and say, okay, we've, experts have come together and said that these are reasonable ways to answer these questions. This is a reasonable way to tax this transaction, or this is the proper definition for this term. And since we're doing that, we hope that, we're doing a little bit of the legwork for the government, and that when the regulators, and they finally get to coming around to, putting guidance and pen to paper, they will look to our white papers, they will look to our comment letters and just, maybe copy paste some of the language. That would be great.
And what do you foresee as the next big trend in crypto? What should we be looking at as the future big disruptor here?
I think there are a lot of disruptors because this technology is growing at such a fast pace. We see changes on a daily basis. I think one of the biggest disruptors is the fact that countries are coming out with their own cryptocurrencies as their currency. So when, before when this all started, we said, oh, you have fiat currencies and then you have cryptocurrency. And fiat is your the dollar, the pound, the euro, and then we have cryptocurrencies. Now we're saying, okay, countries themselves are issuing their own crypto that is backed by the government. And that is something significant to watch out for.
Absolutely. We'll, of course, put up the latest Blockchain Symposium report so that they could see the latest insights from all of those subject matter experts. We will put up the working papers and the FAQs that you just referenced. For anybody that would like to learn more about this topic in general and about your work in particular, where should they be looking to follow if this is really a significant interest of theirs?
Yeah, so one of the things, Kacee, that we created is we have a tax virtual currency webpage that we actually link to a lot of the white papers and guidance that you just mentioned, and all our comment letters are linked there. So I'll send that to you so that we can put it as a link to the bottom of this podcast. But also a great resource to find the most recent news is to go and subscribe to the newsletters of the government agencies. So subscribe to SEC newsletters, to the IRS newsletter. And when you go subscribe, you can select the issue that you're most interested in so that when new guidance comes out, the email will come to your inbox the moment that guidance is released. I also think it's nowadays, go follow the Twitter accounts of your government agency. So I follow IRS, I follow Treasury, SEC, and if you follow them, the moment they issue new guidance, new rules, I feel like I see it on Twitter first.
Great tips, Amy. I had no idea that the SEC and other regulators even had newsletters. What's one message that you'd like to leave for accounting and finance professionals that will help them to go beyond disruption?
The one thing that I think that many accounting and finance professionals are already doing, but in this area they just need a reminder to do more of, is educate. And that's educate themselves. I know, for some, this seems like a crazy technology. It's so confusing. But, we really encourage professionals to educate themselves on what's happening and then take that education and educate their clients, because some of their clients are already dabbling in this area. And if you can educate them on, what are the risks, what's the new trends, that is a value added bonus to the clients. So educate. And then also, if you have an opportunity to do so, something that we do at the AICPA, but also if you're involved in an organization abroad that has connections to the regulators and to the governments, educate the government. We try to educate Congress, members of Congress. We try to educate the IRS and Treasury into the issues that our accounting and finance professionals are concerned about and where we need more guidance.
Thank you, Amy. We greatly appreciate your time today and all of your advocacy efforts. There's plenty more to explore about crypto and blockchain, so be sure to tune into our follow-up episode on this topic. We will be speaking with Ron Quaranta, the chairman of the Wall Street Blockchain Alliance, about DeFi as well as NFTs. To see the links, just click on this episode's info icon in the podcast app on your smartphone or tablet, or open the episode in your computer's web browser. You'll find everything right there. There are some other websites we'd recommend for listeners interested in taking this further. Start at gobeyonddisruption.com or jump straight into your brand new portal at future.aicpa.org. That's future.aicpa.org. Go there for courses, webinars, and other professional development resources, much of it available at no charge. That will keep you ahead of the curve. If you've enjoyed this episode, go tell someone about it. You can also contact us directly via the feedback link in our show notes. We're always keen to know what you think and what you'd like to hear more of. From the AICPA, CIMA, and CPA.com, I'm Kacee Johnson. We'll be back soon with more conversations that help you and your profession to go beyond disruption. Till next time, keep listening and keep safe. Goodbye.
Thanks for listening to this episode of Beyond Disruption, brought to you by the Association of International Certified Professional Accountants. Learn more about today's topic at AICPA-CIMA.com/disruption. This podcast is designed to provide illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Association of International Certified Professional Accountants or any of its subsidiaries or affiliates. It is provided with the understanding that the association, its affiliates, and subsidiaries are not engaged in rendering legal, accounting, or other professional services. If such advice or expert assistance is required, the services of a competent professional person should be sought. The association, its subsidiaries, and affiliates make no representations, warranties, or guarantees as to and assume no responsibility for the content or application of the material contained herein and expressly disclaim all liability for such damages arising out of the use of, reference to, or reliance on such material.